John, we're here in the graveyard at Trinity Church on Broadway. I hear a lot of jewelers have been going bust, the high gold price. What's up? What's up with that?
Well, look, the largest sale of jewelry occurred yesterday when 11 JCPenney stores were robbed in California. So evidently people still like gold jewelry, but for free.
For free. Free would be good. It's getting expensive.
Yeah, I think we're looking at possible chain size failures coming up. Demand has been, to say the least, lackluster, and at current prices, designers, fabricators all have problems. They're looking at substituting with silver, steel, copper.
Steel, wow, steel,
Indeed.
wow, that's going back to Mussolini. Now, very quickly back, you mentioned earlier that you deal with a lot of the jewelers that buy gold, and you're in the industry there. You're hearing some smaller chains actually have gone bust, but you can't mention any names.
A couple of firms have gone under just yesterday, actually.
Just yesterday, so that's very recent news. And you're talking, when you say chain size failures, you're thinking things the size of Zales, things like that?
It's a possibility.
It's a possibility, wow. Anything that could be done to mitigate this?
Well, I think that primarily it's a question of price here. If the trade can survive on a range of no more than, let's say, $730, I think they'll come back. If we're sustaining at 900 to 1,000, we've got problems. The trend has actually been for people to sell back jewelry to pawn shops and jewelers. This year's emerging pattern is that people are scouring their drawer at home, their closets, bringing out all kinds of jewelry and selling it for scrap value at prices that haven't been historically seen yet.
So John, back in January when gold was around about 915, 920, you said it was about ready to correct. It went up a bit and then it has come down. Let's have a look at the chart and see where we are now. When gold got to around 915 bucks, 920, you said it was going to pull back. Looks like it went up a bit more and then it has come down. What's on the cards now?
Well, at this moment, Simon, it's very important that we try to maintain the 200-day moving average right around the 820s.
Yeah.
845 thus far has been the low, which was the previous all-time high back in 1980. When you look at the trend line over the long term, of course, we still have it rising.
Long-term trend support there.
But it doesn't rule out a possibility of falling back into the low 700s, the rough 730 areas where we started this whole adventure back in September.
So that's right back there. So you were talking also about downward trend and that intersecting, which is not looking
declining tops here.
So that's pretty bad news, actually. We've got a long way to go, basically, before we get down.
Well, we've got about $150 possible.
Wow, that's pretty bad. Now, one of the things that you had pointed out earlier was that this spike started around about when the Fed started cutting rates, and we've seen it amazingly go up there.
Now that's almost parabolic in nature.
And now that that's stopped, it seems to be coming down, and you think this continues as the Fed maybe thinks about hiking again?
The probabilities of hikes have emerged over the last 2 days. There is talk of 40% bets that rate hikes might happen before November.
Wow.
Quarter point possible.
Okay, so not a good time to buy gold maybe unless it starts getting down there.
Well, it's a good time to cost average really if you bought anything higher. But most people are of the opinion, like Jim Rogers the other day, that they'd rather wait it out till the mid 700s or so.
Thank you.